嫌い嫌いでも好き月が綺麗ねと言われたい君の目の先ずっと私でいたい月が綺麗ねが私じゃないからなら今夜だけ月が綺麗ねと言われたい私の隣そっとささやかれたい月が綺麗ねが私じゃないから
Alright, bet. So I'm gonna do an analysis on the execution I took today on the NASDAQ. Today's the 7th, no, it's the 19th of Feb. It's a Thursday. In relation to the economic calendar, just had unemployment claims at 8:30 for the high impact news of the day. So I'm just going to go over the higher time frames very briefly. Looking at the daily, we have this daily SIBI right here, and we see the previous day and today engaging with this daily SIBI. The important thing to take away from this daily chart right now is the fact that this daily SIBI is overlapping with the previous monthly low, and we see how this previous monthly low is having an effect and playing its role in the deliverance of price action over the course of yesterday and today. So we do see that when we go into the lower intervals. So when we're looking at the 4-hour, taking a look at the 4-hour, here we have the previous month low, and we can see how price action is failing to displace above the previous monthly low. The bodies are being very respective of the previous month low, and then we end up seeing this deliverance down towards sell side. And then we have the equilibrium of this given range. So this 10 a.m. candle is where my execution was located, and we end up seeing the high of this 10 a.m. candle just coming up and engaging with the equilibrium of this range. So from this high all the way down to this low, you have your equilibrium right here, and then you have your OTE as well. We have 10 a.m. coming up and delivering just above the equilibrium, and if we go into the lower time frames, we end up seeing that this was where the execution was located. So the 11:23 is when I executed the trade, and then we also have the midnight opening aligning with the equilibrium of that given range. And this isn't a coincidence, this is simply just algorithmic. It's as algorithmic as it can get, and it simply just adds conviction into the idea that is in mind. So that is it for the hour 4. Taking a look at the 1 hour. In relation to the 1 hour, not really too much. So we have 1800 being right here. We have that deliverance up towards buy side, engaging with this SIBI, but then we can also see again how the previous month low is being utilized in an efficient fashion. So we're not seeing any displacement above it. The bodies are being rather respective of it. So we have this deliverance into this SIBI, and this is your high of day. This is your London high of day. And then we have the change in stay in delivery, the formation of this order block right here. Now this order block is special. Yeah, it's a special order block because this order block is midnight opening. So when you're projecting this order block in time and you look at what time this is midnight opening. So this would be your time-based PD array. There's many different versions of time-based PD arrays. So you have your like NWOGs, NDOGs, and then you have your first presented fair value gaps of after a certain hour or after a key time opening. And then you have the time-based PD arrays where it's a key time opening that is a PD array. And in this case, it's midnight opening being an hourly order block. So in other cases, it could be like the 9:30 opening being a 15-minute breaker block or a 15-minute order block. So we end up seeing London forming its high inside of this SIBI, and then we see expansion during London down towards sell side, and then we end up having a consolidation ahead of the 9:30 opening. So the 9 o'clock candle being right here, 9:30 opens, and we see deliverance down towards sell side and a cracking correlation with this low right here. So this was the previous day New York AM low. So ES engages with it, NASDAQ fails to follow suit. And this is what ignites the retracement for price action to come back and engage with this order block right here, for us to then continue down this sell side delivery motion that started during the London session. So basically what we had today in relation to the session profiles would be Asia consolidation, London manipulated, reversed, and expanded in the opposite direction, and then New York retraced back into the range of London to then continue the expansion that London had started. Taking a look at the 15-minute. So we have the 1800 opening being right here. We see this high resistance liquidity run up towards buy side, very slow lethargic movement up towards buy side. Engagement with the OTE being right here, and that's where we formed the high of the day during the London session, cracking correlation with YM. And this is also where the hour 1 SIBI was. And then we also have the equilibrium of the previous week's range. So we have the previous week low, equilibrium, previous week high. We end up seeing our high of the day is formed above the equilibrium of the previous week's range, as well as engaging with the OTE. And then there's also the hour 1 SIBI. So yeah, all of these things overlapping with each other. Once again, it's algorithmic, it's not random or coincidental. And it simply just adds conviction into the idea that you have in mind. So London, you have your London projection here with the standard deviation, and you have your -2, -2.5, and your -4, -4.5. So reaccumulation, redistribution at the -2, -2.5, or a smart money reversal, but in this case we are not looking for a smart money reversal. And then we have the -4, -4.5, where it projects for terminus. So a market maker buy model is to ensue after this market maker sell model. And then we also have this standard deviation here from the previous day's trading, which we simply don't forget about because it's a new day's trading. So there's no need for us to completely forget about this standard deviation altogether. And the London projection aligns with the previous day's standard deviation. And we can take a note of how when we come and engage with the -4, -4.5, price action is very respective in relation to the bodies of this standard deviation. So we don't see the bodies painting outside of the -4, -4.5, and then we end up having our deliverance up towards buy side to engage with the midnight opening, as well as that hour 1 order block, which would be this leg right here. And then we have the cracking correlation above the midnight opening, and this is, well, this is as good as it gets, to be quite honest. Midnight opening being an IBDA reference point, the interbank price delivery algorithm, and then we're also seeing a smart money signature being presented at this IBDA reference point. It's pretty green, to be quite honest. Yeah, okay, so jumping into the execution, everything that I have on the chart is as it was. I took 2 executions today, so the first one I was taken out and then I re-entered the trade quite literally less than 5 seconds later. And it was the exact same idea that I had in mind. We're just going to go over that real quick. And yeah, what was I going to say though? Yeah, so everything on the chart right now in terms of the annotations and the drawing is as it was. Haven't added anything, haven't removed anything. Going into a session, my chart is always naked. The only things that I do have on my chart would be the previous day low, previous day high equilibrium, and the previous settlement, as well as the 8:30 opening, because I jump on the charts around 9:15 New York Eastern time. So 8:30 is already opened. Yeah, so today we had high impact news, unemployment claims 8:30. So here you have your data low and then you have your data high. Now, one could pose the argument that isn't this your data high? And that is correct. It's not incorrect. But you can also project your data highs and lows 15 minutes after 15 minutes after the high impact news has been released. So this would be the data high and this would be the data low. And we end up taking a note of the fact that we fail to engage with the data high, we leave relatively equal highs, and then we return back down into the range. And this is all occurring ahead of the 9:30 opening. So before 9:30, we're stuck inside of this range right here. And then we see 9:30 open just right here on this candle. And with the 9:30 opening, this was problematic in my eyes automatically, and reason why being is because 9:30 is opening and overlapping with the 8:30 opening. Now this is not really the best of signs when key time openings are overlapping with each other. This is a signature in price action when consolidation may occur, in which we end up seeing consolidation occurring. And if it's not consolidation, it's going to be very high resistance moves. So the characteristics of a high resistance liquidity run would simply just be the failure to respect imbalances or even print imbalances overall. So that's what we end up seeing in price action. So when I'm seeing the 9:30 opening basically on top of the 8:30 opening, I'm looking to see when we print our first presentation, how many minutes until we print, as well as the fact that is it going to be a bullish candle or a bearish candle. So our first presentation is printed at 9:35 and it is a bearish candle. Are we going to utilize that to continue the sell side delivery motion? Because if we take a note of what the first presentation candle did, it engaged with the data low being right here. So theoretically, you'd look for price action to utilize this first presentation to continue the sell side delivery motion. The only problem is there wasn't anywhere for us to go in relation to the higher time frames at that current point in time. So simply observing how the first presentation is being utilized, and we can see price action meandering around it, engaging with it a lot more than it should, and we see the lack of imbalances being printed out during this segment of price action. And then we finally have this deliverance up towards buy side, and during this segment of price action there was no clean standard deviation for me to project for buy side, so there was simply just a 15-second standard deviation, which we have the -2, -2.5, and the -4, -4.5. So when we're looking at this move up towards buy side, we ultimately failed to engage with the -4 and -4.5, which would be deemed terminus for the market maker buy model in this case, and then we can end up seeing inception for a market maker sell model to occur. But we do have the -3.5 level, which we end up seeing. This is where the -3.5 level, this is also where terminus can occur and inception for a new market maker model to occur. So that's what ends up happening in this case. And yeah, this entire move up towards buy side, I really was not interested. Once I seen the 9:30 overlapping with the 8:30, and then I seen the first presentation and the use of the first presentation, the next thing I'm doing is simply just waiting for 10, because when engaging with price, you're simply just looking for clarity. Clarity is the only thing that you should be looking for in order for you to engage with price. If it's not clear, then there's essentially nothing for you to do altogether. So I'm waiting for 10. I'm intrigued as to where 10 a.m. is going to open and how 10 a.m. is going to open. And we end up seeing 10 opening right here. So where the sell side is, that is the 10 a.m. candle. And once again, problematic. Where does 10 a.m. open? It opens right at the data high. So it's inviting for not the prettiest of conditions, and not the prettiest of conditions is what we had seen, because this is simply just a lot of consolidation. Now, not only are we just seeing a lot of consolidation here, but you'd have to question, where are we seeing this consolidation occurring at? And it's at the equilibrium, and this is the equilibrium of the previous day's range. You have your previous day high, equilibrium, previous day low. We know that what occurs at the equilibrium is a consolidation, and that is what we end up seeing here today. So 10 a.m. opens, we're at the equilibrium. We don't have to be smack on, dead on the equilibrium. If we are around the equilibrium, it can invite for a consolidation. So this is what ends up occurring here. We are consolidating all throughout the 10 a.m. hour. So for an hour straight, we just have consolidation. And during this price action, the only thing that is required from the operator is simply just patience and waiting for clarity. And the only thing that seemed clear to me was the engagement with this high and looking for a point of inception to occur here. So I was looking for Kraken correlation to offer itself, and then for price action to roll back over, because when we're looking at a consolidation, all that's occurring is the engineering of orders. So buy side is being engineered as well as sell side being engineered. So what we have here is equal lows, and then we have trendline phantoms just above here. But the higher time frame that we've already gone over would have been bearish. We're looking at the higher time frame and we're looking, okay, we've just engaged with the daily SIBI that we engaged with yesterday, and we've seen yesterday use it efficiently in terms of no closure inside of it at all. And then when we look at the hour 4, we're looking at the previous monthly low serving as a point of resistance. and as well as the fact that there was a tiny imbalance here on the hour 4, but I wasn't really paying attention to that all that much, to be quite honest. So this would be that imbalance, but I wasn't paying much attention to that. So yeah, I lost my train of thought. It would be, so overall would look to be taking shorts within the market as it's aligned with the institutional order flow and would invite for, well, typically invites for cleaner price runs, which is what we end up experiencing during this trade here. So consolidation, and then we have this deliverance up towards buy side, and what we end up delivering up to is the true day opening right here, which is also in alignment with the equilibrium of this 4-hour range. So true day open being your midnight opening, we deliver up above it, cracking correlation presented, and my first execution was on the 15 seconds. So if we drop down, and yeah, so we drop down, and so we have that engagement with the high, midnight opening engagement, and then we have the inversion of this BISI right here, and then I executed off of it. Now, when I executed off of it, I wasn't actually too fond of the trade altogether. Reason why being is these two up close candles right here. I didn't like them. Didn't really like them, but this candle displacing through the BISI was rather convincing in terms of, okay, I can execute off of this and I'll put my stop up at the high that resides right here, and would have looked to see this imbalance that resides here to serve as resistance and price. We don't end up seeing that. Price action just absolutely rips right through it. Now, no, it's not really that important. I was going to say the case that this would have been valid is if this high ended up engaging with this high, but it doesn't do that. It simply just engages with this this wick right here. So the next execution, so we end up getting taken out right here at this high, and then the next execution was on the 5 seconds. So another cracking correlation was offered, and my idea was still in play. It wasn't invalidated just yet. So taking a look at the 5 second. So I'm taking out on this candle, and then we have this one candle slamming back down, and then we have the inversion of this BISI right here. So I ended up including the volume imbalance as well. So you include the volume imbalance, and it was just one nice clean candle that ends up taking it. So I execute off of it, and my stop loss just being at this high right here. And then the reason why this trade was a whole lot cleaner was because it offered a way cleaner standard deviation. Now, I forgot to mention that when we were looking at the 15 second with this execution that I had taken, there wasn't really the best clean standard deviation. I would have had to standard deviate this high all the way down to this low. But the only problem is that when you were looking at the M1, it's not a swing high to swing low. So you see the first execution is on this candle. So it's not clean. Like in terms of the standard deviation, it's not the cleanest. You'd have to grab something like this. And that's not how I grab my standard deviations in terms of when I'm looking to execute and aligning myself with my model. It's always a case of anchoring the standard deviation from the right to the left. Only very rarely is the standard deviation anchored from the left to the right. So the reason why the second execution was a whole lot better was because there was a cleaner standard deviation to anchor, being from this high down to this low. And once again, my conviction of an idea is simply just stronger when my standard deviations align with a target I was already seeing without the standard deviation being anchored on the chart. So before I was already in this trade, once we have taken this high, my eyes are already set to these lows right here, as well as these lows, because these were the AM lows and these weren't a solid low. There was no low actually put in here. All we're creating here is simply just a TLP, which is just asking to get ran through essentially. So automatically we've taken this high, my eyes are drawn to these equal lows, which are very clean, and then this low right here. And then another factor was 10 a.m. We consolidated the entire hour, and then we engaged with buy side, leaving sell side. This would be your classic AMD, accumulation, manipulation, distribution. So clean standard deviation, -4, -4.5 aligns for this low, adds conviction into the trade. And then we end up seeing this clean, smooth, low resistance run down towards sell side. And this is what should normally always occur, especially when I'm trading my reversals at inception, because at inception is where your smart money reversals occur. And once the smart money reversal is put in and we are leaving the smart money reversal, we leave instantaneously and very fast. Now, of course, there are times where we could end up seeing a retracement back to the smart money reversal, but if the idea and narrative is still in play and the objectives have not been met, then we're simply still looking for the idea to pan out. So at the point of inception, after the execution, movement down towards desired targets almost instantaneously, and then we have this smooth, nice low resistance run, engagement with the -2, -2.5, and then we come back, we reaccumulate orders, deliver above the equilibrium of the previous day's range, engaging with this BISI right here, and then we have that deliverance down towards sell side, engagement with this BISI right here, utilized in an efficient fashion, and then we end up seeing price action delivering down towards sell side in a nice clean manner.